The crude oil markets ended the week on a high note, extending their winning streak to 3 consecutive weeks. A potent combination of geopolitical tensions, supply disruptions, and strong seasonal demand fueled the rally. Let's dive into the key drivers behind last week's energy market momentum. The U.S. imposed new sanctions on Russia's oil industry, heightening supply concerns in an already tight market. The sanctions targeted Russian companies, executives, and shadow fleet tankers involved in oil exports, further constraining supply. Analysts observe that India and China, major buyers of Russian oil, might need to seek alternative sources, such as the Middle East. This potential shift amplified the geopolitical risk premium, underscoring the crude market's heightened sensitivity to supply disruptions. Severe winter conditions across the U.S. and Europe have significantly increased demand for heating fuels, lending support to oil prices. Meteorologists predict colder than average temperatures in key consuming regions, driving up the use of heating oil, kerosene, and LPG. Traders anticipate that this seasonal demand will persist, providing a short-term boost to crude prices. Renewed optimism over China's potential economic stimulus is fueling bullish sentiment in the oil market. As the world's second-largest oil consumer, expectations of heightened industrial activity and transportation demand from China are enhancing global consumption forecasts. This sentiment aligns with rising spot premiums for Middle Eastern crude, further strengthening the demand outlook. OPEC's latest production data for December revealed a 50,000 barrel per day decline, primarily due to maintenance in the UAE and reduced output from Iran. Meanwhile, Saudi Arabia and Iraq maintain steady production levels, adhering to OPEC agreements to limit supply. This ongoing market tightening provides another layer of bullish momentum for crude prices. Natural gas futures in the U.S. surged on Friday, breaking decisively above the crucial $3.80 pivot and reaching their highest levels since late December. This level now serves as strong support, with analysts anticipating further gains toward $4.20 if bullish momentum persists. However, market volatility remains a concern, with shifting weather forecasts and potential profit-taking posing risks of sharp pullbacks. Natural gas prices are climbing on the back of sustained cold weather projections. Much of the U.S. is expected to endure frigid conditions through mid-January, with lows ranging from -10 degrees Fahrenheit to 20 degrees Fahrenheit in the Midwest and Northeast, and temperatures dipping into the 20s and 30s in Texas and parts of the South. Bullish sentiment strengthened further after the European weather model turned colder, while the overnight GFS model added 16 heating degree days. An additional Arctic blast is forecast early next week, further boosting heating demand and straining storage inventories. Demand over the next 7 days is projected to remain high to very high, tightening the supply-demand balance significantly. Record-breaking U.S. liquefied natural gas exports are also providing strong support for prices, with shipments to Europe surging. European supply concerns have escalated following the expiration of Russia's natural gas transit agreement through Ukraine and an unplanned outage at Norway's Hammerfest LNG terminal. This surge in U.S. LNG exports underscores robust global demand, further exacerbating domestic inventory pressures as colder weather grips much of the country. Analysts highlight that LNG demand will remain a key driver of price movements in the near term. From a technical perspective, crude oil market has broken decisively above the key long-term pivot at $74, triggering a rally that pushed past the October main top at $75. Should buyers sustain this momentum, the next target lies at the April main top of $86, with an ultimate upside objective at $88. However, the market faces downside risks if $74 fails to hold as support. In such a scenario, a pullback could extend toward the $71 to $67 range, potentially testing the strength of bullish sentiment. As nat gas prices flirt with the $4 threshold, traders are closely monitoring the potential for a rapid reversal. The weekend's weather updates are poised to shape market sentiment for the week ahead. Colder trends in the final 10 days of January could sustain bullish momentum, while a shift toward warmer forecasts or profit-taking by hedge funds might trigger a sharp pullback. A breakout above $4.20 could ignite fresh buying interest, with the next target at $4.40. On the other hand, if momentum falters and prices drop below the $3.80 support, the market may risk sliding toward $3.40 or even $3.20. Please like, subscribe, and comment to support the channel. See you in the next one.